Hi everyone, today let's take a quick look at the economic data for the European Union, and then of course we'll take a look at all of the daily and weekly charts on those longer time frames to see where markets could be going over the next week to 2 weeks. Do me a quick favor and like and subscribe and watch the video till the end to help out the channel, and let's get started. So looking at the data here for the European Union, not super great, and I really wanted to highlight this here today because we did get that news around potential increasing of the tariffs around the European Union, and we did get PMI indexes here that were not as good as they were expected to be. So European Union manufacturing, services sector, both shrinking in April, composite numbers both below that 50 mark for the first time this year. So not great at all. That is not what you want to see from these EU countries. Germany and France both fared even worse at a 48 and a 48 here. So UK looked a little better at 49.4, which is interesting. Still shrinking below that 50 line, but not as good as they wanted. But prices still going higher. Inflation still not completely stamped out in the UK. So UK policymakers not going to be able to reduce rates because they are still fearing that inflation. And again, this is all on the back of potential tariffs being increased, not wanting to play ball with the United States right now. So if tariffs go up to 50% for these countries and they're already seeing contractions in manufacturing and services, you could try to blame it all on manufacturing, but services are also shrinking within these countries. So not great at all and could potentially get worse. So if they're stuck between US tariffs and a shrinking economy, that might put them in a position where they're going to have to play ball a little bit more, which again is good for the United States. And you can see the data there on the chart, well below the 50 line, not what you want to see at all. Do we start to see stagflationary environment? Again, they're saying here, cuts probably not coming for the EU. And if the trade disputes continue to go on while this is happening, they could go into full-blown crisis mode, which would start to drag down the broader economy, the global economy. Of course, they're not isolated in this, and we can't just sit by and wait. This could affect the global economy and pull down the United States with it. Looking at fear and greed, we finished the week at a 64 down from a 70. We are on the downswing right now. You can see price moving lower, strength still pretty flat for the week, but breadth moving lower, put call ratio starting to roll to the upside, volatility spiking here through the week, safe haven demand moving down, and junk bonds still sitting in extreme greed relatively flat here. So overall, not a whole lot of movement, but we are starting to see some of those early indications of a potential retracement to the downside. Moving over to the AAII survey, you can see the bulls are back to their historical average. The bears are getting squeezed, not quite at the historical average, but they are getting squeezed. And this is why I think we are ready to move down. Markets have swung sufficiently to the bullish side. There are enough bulls in the market to continue to buy, even if the market goes lower. And the bears are going to start to resurge here. Over the last 4 weeks, they've moved a lot lower, and I do think we're going to see a major reversal of this over the next couple weeks. Moving over to seasonality, we are supposed to be a little bit more choppy here into the end of the month. You can see 27th through the 30th, sideways choppy, a little bit of bullishness potentially on the Russell. And then for the normal years, this is meant to be quite bullish, but post-election is where we're at. Sideways choppy to slightly bearish is what I think we'll end up getting through the end of the month. Moving over to the seasonal calendar, you can see all bullish here for the start of next week. We'll see if that comes to fruition. Pretty good metrics there for the Tuesday. Don't forget we're closed for Memorial Day on the Monday, but overall bullish. We do get the FOMC minutes on the Wednesday, consumer confidence, durable goods. On the Tuesday, GDP Q1 revision for Thursday, and then we get Chicago PMI, consumer sentiment, some soft data there on the Friday. We do get PCE as well, which could be interesting. Not expecting anything crazy out of that. And then looking at the economic calendar here, you can see Fed Powell speaking on the Sunday. Interesting. Really nothing for the Monday. For Tuesday, a little bit of soft data, durable goods numbers. Again, expectation is a huge step down. Definitely going to be interesting to see if that comes to fruition. We went from 9.2 to a minus 7.9 on the expectation. Consumer confidence also moving up a little bit. Okay, interesting. And then Atlanta Fed GDP flat. No expectations there for movement. FOMC numbers, GDP numbers, and this is just crazy here. So the original was at 2.4%. The expectation for the forecast is a minus 0.3%. That is a massive swing there for Q1 GDP. Definitely seems fake to me. It's almost like these were fixed in that first iteration, and now they're going back to what the numbers actually were. So this is a bearish expectation for me. And then you got core PCE numbers, that's expected to go a little bit higher for prices. And then the core PCE data here for the week, no forecast in there, so we'll have to follow up on that, see if something comes in during the week. And then you get Chicago PMI on the Friday as well. Moving over to Max Pain, not a whole lot going on here with Max Pain, only 466,000 options. But there's a put wall here at 580 that does give you about 1.5% of downside potential for this week. Could go as low as 575. There's call walls here really at 590. So that's basically right at current price, meaning that, again, there's a little bit more downside potential here for the end of the week, which does fit with my current thesis of bearishness for this coming week. Moving over to the charts, starting off with the S&Ps, you can see we did get a clean rejection. So we ended up gapping down, hitting a rejection off of that trend line here, close to that 21-week moving average at 57.63. Are we going to touch that level? I would expect so. Momentum did continue to step to bullish, even though we didn't get a continuation on price up to this next trend line, which was the expectation after last week. So nice rejection there. Obviously, some of that is geopolitical coming out of that recommendation for EU tariffs at 50%. Are we going to get the continuation down to this next kind of zone of support between the 55 and VWAP, somewhere between 56.88 and 56.14, somewhere in here I think makes sense. And then you got the 9 sitting all the way down at 55.48. Do we go that low? Probably not in 1 week. And if we did, I would expect some buyers to come in that area. But at this point, it does seem like we have a high, lower high setup here. Do we get some follow through to at least double bottom, maybe a slightly higher low structure in here, all the way down at the 5,000, maybe 5,100 area? That would be interesting. But if this does turn into that weekly downtrend structure, that is going to be a trend that could last for several months into the medium to potentially long term. The last time we saw a change in structure like this would be back here from 22 all the way to the basically end of 22. So a couple of months there, that would be medium term for me. Less than 1 year, but it did last several months, ultimately leading to that longer uptrend. But in the short term, we did have a pretty solid pullback to that 200, which we did not touch on the weekly chart. And the fact that we didn't touch it here reminds me very similar to something like this, where we did have a pretty substantial move down. Obviously, this move here was much more quick in terms of time, but we came down, hit that 144, very close to it. Maybe that's more like this. Got close to that 144, get a little bit of a retracement. Obviously, this has been a more aggressive up move off of that low here, but then ultimately it did come back down to the 200, which again is in that 4,700 area, 4,720 in here. Do we ultimately come down to that? I think that is absolutely a possibility, not something that we should overlook here over the next couple of weeks to potentially months. But otherwise, looking at the daily chart here, looking at those levels, you got the 200 in here around 573.20. This is going to be a zone of support in the short term. Do we get a little bit of a retracement, a double top or a lower high setup, and then a kind of continuation into this zone here? That's absolutely a possibility. In terms of levels right now, 578.87 is your support. We did close above it. We drifted below it in the after hours, so we'll see if that ends up being support or not. And then the next level to the downside, 569.90. It's kind of a pivot point from back here. If we do get the rally through, 585.91 is that next resistance. Moving over to the Tasty charts here for the SPY on the weekly, we did come up to that ATR trailing stop, tested it 2 weeks in a row, and then rejected off of that level. We said that was going to be a critical zone, 594.85, critical zone there. We did come up, like I said, multiple tests, clean rejection off of there. So right now, the resistance is holding, expecting this to continue lower. That ATR lowest band is all the way down at 498.47. That's what I would expect to see a touch of if we do get this continuation of this downtrending structure, which again takes you at least to this as a double bottom. Then we'll see what happens after that. You got the 144 down there as well at 506.90 or so, somewhere in that same zone, within 1% or so of the price target. And then looking at the daily chart, we are actually in bullish conditions here. So this is showing a little bit of mixed signals on markets. The weekly chart, I would say, has a little bit more influence. Obviously, it's the longer time frame. I would expect markets to adhere to that, but you do have bullish conditions. The trailing stop right now on the bullish move is 570.35. So bulls and bears are going to fight it out in here. Those short-term traders versus the medium-term traders are going to battle it out for some price action, and we'll see who wins. Like I said, I still believe the bears are going to win this one. Moving over to the NASDAQ here on the weekly chart, you can see we did end up getting a down move, down about 2.33%. The trend line is your support here around 20,600. If we do get the hold of the trend line continuation higher, higher, that would give you a price target in the 22,500 area, 22,400, somewhere in there. That would take you back to these all-time highs. But if we cut through here, then you're looking for that same kind of zone between the 9 and the VWAP area, somewhere around this kind of 19,500, 19,600. Right now, momentum is still bullish, RSI is still bullish, and watching this trend line for some clear direction. And then looking at the cues here for the daily chart, you can see the level was 509.74 for that Friday. We did close below it. So this looks like a nice topping pattern, big move up, hit the major resistance, 523, rejected off of there, broke that first support. Do we get the follow through to here at least? 496, my level in here, 498.96. I think this is where we're going, at least in the short term. Momentum bearish, RSI is still bearish. You do have some trend support in here around 504.20 or so, and it certainly could bounce off of here, give us a double top, maybe a lower high setup, and then that continuation lower. But either way, I do believe this will retrace a fairly significant amount of this move. Moving over to the Tasty charts, this did flip to bullish here on the weekly chart. I'm calling it still bearish, though. I think the SPY charts are going to be the better ones to watch. We did close above that trailing stop, which was 517.76. Right now, bullish conditions, trailing stop 417.80. Does it come down and retest in here? I think it absolutely will. And then looking at the daily chart, obviously bullish conditions here, dipped below that 8 EMA, current trailing stop 495.37. That's where I'm expecting to go, at least in the short term. Do we break through there and get into bearish conditions, head towards that lowest ATR band, 472.26? I think that's absolutely a possibility as well. If we do get in here, then I would expect a bounce, lower high setup, continuation lower, change in structure. So a couple of scenarios to watch for. Right now, short term at a minimum, looking for a little bit more bearishness, but could ultimately get a couple more days of topping pattern. Moving over to the Russell ended up rejecting off that 21 EMA, down 3.5% or so, headed back towards that next level in here around 199, 198.75, somewhere in there. If it cuts through there, then we're looking for a retest of this trend line at a minimum, somewhere around the 183 area. Right now, we've broken back below this trend line, filled that gap here, expecting this to go a little bit lower. But if it's going to hold, it would be somewhere in here, like I said, 195 to 198 zone. This zone needs to hold, get the continuation higher. If it retraces to here, I think there's a possibility we retrace this move completely. And then you can see this structure already on the Russell has already been quite bearish. So you have a high, lower high here with that low, much lower low. Is this going to be a high, lower high structure in here? And then we get a bigger continuation lower back down to these lows around here, 164. That would be an interesting move. We've retraced a lot of that move very quickly, but this medium-term structure is still very much bullish, waiting to see if we get that change in structure or not. Moving over to the Tasty charts on the Russell, you can see on the weekly, very much still bearish. Got into the middle of this range here, rejecting off there already. Did hold the 8 EMA on the weekly chart, which is interesting. Didn't get anywhere near that trailing stop, which is all the way up at 223 right now. So plenty of room to rally and still stay in bearish conditions. Still expecting this to continue in bearish conditions. On the weekly chart, your price target would be around 176.90, 177, somewhere in here. And then looking at the daily chart, still bullish conditions. Your trailing stop 196.83, watching this zone in here. Price target to the downside would be about 191 or so right in here. Do we get a little bit more topping pattern? Certainly possible. You can see the retest of that 144 EMA on this daily chart, expecting this to continue to sell here to that lower range. Moving over to the Dow, we did get a down week, down 2.4% right to the level 413.22 is your support. You got some trend support in here as well. Right now, this still looks like a high, lower high setup. Do we get a low double bottom somewhere in here around 370? I think that is the thesis that you have. Otherwise, you could get a little bit of a wedge pattern in here, somewhere centering around that 400 level. Either way, I expect to move lower from here in the short term. 404 is probably the target. 413 I would expect to break. You could see some support in these kind of EMA zones somewhere around 405. Somewhere in here makes sense, but momentum slightly bullish. RSI probably going to break back below the SMA here, which if that happens, that's going to be another pretty bearish indicator, expecting that lower low to come. Moving over to the ratios here, you can see the SPY did outperform. The NASDAQ also outperformed here. Momentum still bullish on the NASDAQ, but just can't seem to get above this trend line here. We've hit it twice, 2 weeks in a row. If we get through here, maybe we go to the 366 level, but really we have not moved. And the fact that the NASDAQ is not leading us higher anymore means that this rally is probably done in the short term. Do we get a pullback down to this trend structure here around 3.5? Couple of weeks of downward movement makes sense to me. Russell and SPY still pretty locked into this 2.7 to 2.9 range. Could go either way. I would say this is a bit of a wick rejection. Maybe we get a down week next week. Either way, this is still consolidation, and we are in the upper regions of that consolidation. So expecting this to go lower, maybe a little bit of Russell outperformance, and the NASDAQ should underperform this next week if we finally get that breakdown off of this high. Moving over to the SPY divided by the M2 money supply, you can see that down week here didn't quite get to that 27.5 level, back below the 55, back below the 21 EMA momentum, still swinging a bullish. RSI probably going to pull back to that SMA. If it breaks below there, obviously that's quite bearish, but for now we could just get the retest. Higher low setup continuation is a possibility. If we get the cut through, then we're headed back towards that 200, most likely, in my opinion. The other thing I wanted to highlight here on the daily chart, especially since we don't look at this one too often, is this 200 SMA here. So we did get to this level, overthrew it briefly, broke back below it on the Wednesday session, stayed below it Thursday, Friday, headed towards that 21 EMA, again the level 25.91 there on the daily chart. This is an interesting level, but realistically, we're back below the 200. I would call this a big breakdown, big retest, big breakdown from that level, which again is another bearish indicator. And I would say this is most likely going to go at least to this 55 EMA in that 25.41 area, a little bit below that 25.91 level. Moving over to Apple and Microsoft. Apple had an absolutely terrible week, down 7.5%, breaking back down from that 55 EMA. We said this was a double top pattern on the daily chart, and sure enough, we've gone to that low here around 193.96. Expecting to go through there. Momentum on the weekly chart continues to be bearish and actually got another step towards bearish. You can see the breakdown, retest, breakdown on the SMA, on the RSI there, and then you can see Microsoft, big wick rejection from that 453.30 level, back below it. Do we get a continuation back to the next level, 440? I think that's most likely the play there as well. This is super extended. I don't think this is going to give us a breakdown all the way to the 350 area by any means, but a little bit of a retracement does make sense in my opinion. Moving over to Tesla and NVIDIA. Tesla was down 3%, NVIDIA 3%, basically the exact same, actually 3.04%. In terms of resistance, here you got Tesla at this trend resistance. We couldn't get above it. We didn't even technically test it here, so that's not great. You got a high, lower high potential here. Unless it pushes through and starts to get at least to a double top, I'm going to say this is probably going to pull back at least to these lows here. Momentum is still bullish, RSI is still bullish, so there's potential it still continues through here on the weekly chart. And then looking at NVIDIA, still holding that 130 level, still don't love it here. This really looks like a left shoulder, head, right shoulder setup on the weekly chart. So if that ends up being true here, that's going to be quite terrible. Your neckline is here between this 90 and 95 area. If this is a full long-term topping pattern, you would expect this to pull back into the 50 to 70 area. And this is pretty clean on the left shoulder, head, right shoulder setup. So watching this closely, if this starts to roll over the next couple weeks, obviously this is a weekly pattern, so it could take a while to come to fruition, but for right now, that's what it looks like, and I might start looking at a short position here on NVIDIA. Moving over to Amazon and Alphabet, both of these having not great weeks, 2.4%. Alphabet had an okay week, 1.2%, but did go quite a bit higher, could not get above all of these trends here. This still looks like a bear flag to me, but through a big wick, out of the range. Does it reject from here and get that continuation back to the low of the range, somewhere around this kind of 160 area? Let's extend that out just a little bit, somewhere in there. Basically 160. The momentum still swinging a bullish, RSI still above the SMA there. But if you look at these still kind of look like the same kind of head and shoulders pattern with this left shoulder here, head, right shoulder forming. Similar here on Alphabet as well. Left shoulder, head. Is this the right shoulder? Does this start to roll over? If we start to see this head and shoulders pattern forming on multiple Mag 7 stocks, that is going to be quite terrible for the broader markets over the medium term. So for now, it's still okay. We haven't kind of culminated on this right shoulder. Could go a little higher, could get a consolidation. But if it starts to roll and it takes out this neckline, it's going to be a major down move for the next couple months, in my opinion. Moving over to staples and discretionary. Staples had an okay week, down about 0.5%. Big wicks in both directions, so a bit of an indecision candle. Couldn't get above 80.50, but did test the level. Couldn't get below 81.18. Also testing that level. Momentum's basically zero. So just consolidating in this range, still above all the EMAs. So might see a little pullback, but I would expect it to get bought up. And then looking at discretionaries here, huge gap up into the previous week. Down week this week, 3.2%. Still holding to 10. Realistically, I think we get the gap fill over the next week or two. Momentum still a little bit bullish. RSI probably going to pull back to that SMA. You can see big breakout here, comes back down, retest the level, and then do we get the continuation from there? That's a possibility, but either way in the short term, this should go at least a little bit lower in the next week, maybe 2 weeks. Moving over to 20 and 50-day market breadth here, big down weeks on both of these. 42 and 23% respectively. Expecting 20-day to go at least to this kind of 16 to 22 area. Back in here, that's where we seem to get to in this zone here before we start to see major bounces. Obviously, it could go lower than that, but I don't think it will. We did have a big spike down. Usually you don't see those in back-to-back lows. So something in here, something down here makes sense. Either way, still got a couple of weeks to get there. And then looking at 50-day, same thesis here, got your big down week. Usually that means we're getting at least one more down week on a big second week continuation, which should take us at least to this kind of 40 area. This is where I would expect to go. Cut through 52, go to this 40 area, maybe as low as this 32 area, somewhere in this range. Then we get a little bit of a retracement, lower high setup continuation. That's what I would be looking for, but for now, either way, short-term bearish, looking for a move into this 32 to 40 area. Momentum stepping to bearish, RSI is moving lower. 20-day is right at the SMA. I expect this to cut through there. And the 50-day should at least go back to that SMA down here at 47. So again, nice little move to the downside. Then we'll see what happens on that next setup. Moving over to the dollar was down 1.8%. Pretty big move for the dollar in a single week here. This RSI continues to break down. You can see the retest of the SMA continuation lower here. Next level is 96.8. Obviously, this is on the back of that EU tariff news, and this is truly below this consolidation now. This was a very, very long-term consolidation going back to April of 22. We are now below the lows of all of that consolidation, expecting to go back to here. Also got this trend line in here around 95 or so. Probably going to go to here. That's what I would expect. So bearish on the dollar, which is typically bullish for equities, but if this continues to crater here, creating some uncertainty in markets and around the dollar, that can start to be a potential for fear in the market. So want to have a dollar that's kind of moving down, but not in such a dramatic fashion, more of an orderly fashion. Right now, this is not super great for markets. Moving over to bonds here on the weekly chart, J&K was down about 0.5%, nothing crazy, still in the same trading range, no worries here at all. TLT on the other hand, we're getting very, very close to this most recent low around 82. Again, I'm still saying this is a long-term buying opportunity. Anywhere between 82 and 85, realistically up to 89 is still a good opportunity, but in the short-term structure, this is still quite bearish. Momentum quite bearish, RSI quite bearish, the volume picking up on that sell. So does this go any lower? And really what I want to highlight here is the fact that this goes back all the way to the beginning of TLT back in 2002. The lows here around $80 to $82, just below this lowest level. And anything in here was a nice opportunity for the next 2 decades. And then we had the big sell-off with COVID. Is this another opportunity for the next couple decades? I do believe that is true. This is a long-term basing pattern in my opinion, and anything below 85 should be a nice opportunity for the next several years. Moving over to the VIX here, you can see the VIX was positive on the week, about 30%. Big move higher. Momentum not going with it quite yet on the weekly. The daily chart is certainly going with it. RSI is starting to spike up there. Still looking for this to get into this kind of 28 to 32 area. In here makes sense for me. I have some trend lines in there. This is also a higher low setup, expecting this to go higher into this range. This is what I'm looking for. So again, next couple weeks, VIX spikes into this zone. Do we get as high as this most recent peak around 60? I would say probably not, but do we get into the 32 area? I think that's probably likely. Get a lower high setup and then get this kind of basing pattern. Very similar to what we saw here, where you get a big spike, retracement, spike into this kind of range, retracement, multiple spikes on this kind of overall downtrend. That's what I'm expecting, at least for now. And this is in the very early stages of that. Moving over to my accounts, I had a pretty good week, up around $800. Nice little move here. I took profits on the shares on the up move, so that was good. And then I held those calls into the down move that we got towards the end of the week. Those are not quite into a full profit yet, but over the next week, I would expect those to start to move into profit. I still have 26 days left on those. Of course, Monday is an off day, so that one doesn't even count. So really 25 days left on there, and that includes a couple of weekends still. So time for this to continue to move lower. I think price is going lower. I think this theta is going to start to come in over the next couple of weeks, so plenty of opportunity. If we end up lower than 505, that's going to be a nice profit around 2800. That's the hope, and I do believe we're going to go much lower. If we start to show a basing formation, obviously I'll take these off. There is still the potential for a higher low setup. That's absolutely possible. But for now, everything does look a little bit bearish. So I'm just holding these kind of medium term calls here over the next month or so. I still think this market is set to go a little bit lower over the next 2 weeks at least. So sitting on these, waiting to see what happens. If we start to see more aggressive moves, maybe I'll put on some shorter term positions to try to take advantage of those. But for now, we have a pretty consistent downtrend coming up over the next 2 weeks. Let me know down in the comment section what you think of the European Union, their shrinking economy, their pressure from potential tariffs. What do you think about the UK and the UK deal? Are they going to be a good place to be to try to avoid some of this risk? Or is it all going to go down together as one big global economy? Let me know. Otherwise, like and subscribe if you got any value out of this video. Make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.